the show.
Sorry.
Next up, Europe. Now, the Eurozone has an enormous economy in aggregate, but it's been in trouble lately. You've seen the news headlines. They're not getting any better. We've got another bailout on the cards for Greece. In fact, I just see this movie over and over again.
Yes.
I'm not even sure where in the picture we are.
Europe's fabulous. What a great place. I love Europe. People are apparently doing badly there. When you go there, you might be expecting when you get off the plane to see people wearing rags, wandering aimlessly in the streets. Apparently not. Very rich countries, people with enormous wealth. They've got an unemployment issue, but who cares about that? What I want to tell you, though, is that the Dow Jones Stoxx Europe thing that we're talking about here is like the largest companies, dominated, as you may well expect, by German companies and French companies. So all of this, you know, Siemens, Krupp, Porsche, the motor manufacturers in France, the banks, that's what we're talking about here. But yes, it's been a bit sloppy lately.
So what index are we looking at here? I'm a little confused.
This is the Dow. This is not the right one.
This is not the right.
We have the wrong continent there. That's America. We need the European one.
We're getting to the American story. It's also perhaps, but perhaps a little more positive than the Europe. Anyway, let's go back to Europe.
But I think what Paul's making the point. It's important to understand. A good company doesn't necessarily make a good investment, right? And it can be a mismatch, but a bad company can be a good investment, and likewise, a bad economy doesn't necessarily mean that there's a bad investment story behind it.
So you could have a good company in a bad economy, and it's sold off because it's in that bad economy, and the upside could be enormous.
There's value there, and that's the point. You want to actually get value, and in Europe, there's a lot of value that's actually developing. If you go around the world, there's some in Spain, Italy, etc., some fabulous multinationals doing very well, but just happen to have a headquarters domiciled in a country that's given trouble, and the stock exchange has reflected
this
that.
This is not bad. This FTSE 100 is not looking bad, Paul.
Yeah, except that we're going to talk about the UK later, so that's also not the chart.
All right, so
nice try.
We're going to go to
but look, the problem with Europe,
DAX, aren't we?
Problem with Europe is that they have driven this austerity type of thing, and the ECB has been quite tight. So retail sales still very sloppy. The investment environment and the consumer confidence in Europe is still rather dim.
Yeah.
So I don't know that there's going to be fireworks there in the short term. I'm completely sure that Europe will rally and do fine in the years to come. I mean,
but in the short term, it's not.
Yes, and we're looking at 2-3 month trades here. So
this is perhaps one to stay away from.
Yeah, I still think that there's trouble in Europe, and you know this when the bailout money to Greece and Cyprus, etc., is going to pay pensions and salaries, and that, then you know that there's trouble. This is just a short-term kick the can down the road kind of thing, and that we're not stabilizing, and that investors are not going to flock to France to take advantage of 75% tax
I think they're too nervous to put the DAX or any European index on there because the news is too bad.
No, but the Europe has shown signs in the markets of picking up recently. And that's what needs to be reflected. That's the point. Is a bad economy doesn't necessarily mean a bad investment
case
opportunity. And sometimes when things are at their worst and they can't get worse, that's actually the time to be contrarian.
But that's when you have to be brave.
That's the
Paul,
contrarian
are you brave
play
enough?
Look, I mean, there are some wonderful companies there. I've mentioned some, but I could add some others. I mean, the big European pharma companies, fantastic. You know, Sanofi, Aventis, these kind of things. Nestle, I mean, one of the world's best consumer growth stories out there. They've got companies coming out of every orifice. So it's just what you'd want to be owning for the long run.
Yeah.
But my concern remains is that the mood there is still negative. A lot of the asset management guys there still
So
rather
you're saying
bearish.
you're not expecting a re-rating of the companies, and perhaps, Chris, we put this to you.
Yeah, but this is, I think, what I can drag out of what Paul is saying.
Yeah, at least you can drag something out of what he's saying. Not many people can.
Is that in some markets, the better opportunities are picking out the individual stocks rather than taking the whole market.
Well, that's profound.
Okay. And that's but that's basically the active passive debate. So in some cases it's the active managers, and when markets are struggling and economies are struggling, the active managers tend to do better. It's in these rampant bull markets that owning the index is actually fine, because it's very seldom that the active managers will actually have the concentration that you find in the indices sometimes, that you find this. And so one also needs to see the state of the market. And in effectively Europe, it's been struggling, okay? And you'd want to be active.
If you advocate in favour of an index, and too heavily so, you may be putting yourself out of a job. We've got to remember you're an active manager.
Yes, so there's a vested interest.
He has a vested interest.
But there are times the index does better than active. We need to appreciate that.
I'm quite fond of the contrarian trade every now and then. Yeah. So personally, I own an ETF, which is Spain, and I own a European financials ETF, which I bought a year or so ago just because everyone was bleating about how those things were totally finished. So, but those, I think, need to be distinguished from the idea of the hot stocks portfolio, which is about short-term advantage. Anyway, so we're talking about these global
So which index are we talking about? Which one would we access on Europe, considering we can't get it up?
No, the one we're going to be accessing on this platform that is offered to us for the portfolio is definitely the Dow Jones Hot Stocks. It's Dow Jones Stoxx something or other.
Stoxx 600.
I'm not sure if it's the 600 or the 100 or something, but it's these large European countries.
No wonder they can't get the data up. You didn't give them the right direction.
These large European countries cross Europe, not the UK, not Eastern Europe, not Russia, Western Europe, the traditional markets.
Right. So now that you've confused us, is that hot or not?
No, I don't think it's hot enough. I think it will eventually be hot, but for me right now, not hot.
Hot or not?
I would concur. I'd say there's too many short-term obstacles in the way.